Risk-on investments have been the hot topic on Wall Street lately, with tech stocks stealing the spotlight and putting up the lion's share of the gains. Take the popular chipmaker Nvidia Corp. Ticker, NVDA, which has surged a stunning 230% in the last year alone. In such an environment, sleepy dividend stocks don't really get most investors' motors running. But while the typical stock in the S&P 500 yields only about 1.6% at present, the highest-yielding S&P 500 dividend stocks all deliver yields north of 6%, roughly 4 times the typical large U.S. company. That kind of high-octane income potential is a different story altogether. There's admittedly some risk in companies like that, as now generous dividends can be overshadowed by declines in share price or the risk of future cutbacks. But if you're looking to get a bit more out of your dividend stocks, consider these high-yield companies. A note of caution: if you are looking for a relatively stable dividend stocks with low probability of dividend cuts, then the following 7 dividend stocks may not be suitable for you. However, if you are interested in increasing your portfolio income stream with some large dividend-paying stocks, then these stocks might be for you. 1. A relative newcomer to the lineup of top S&P 500 dividend stocks, Pfizer is a classic case of a company that has become a yield monster lately for all the wrong reasons. Yes, it has a long tradition of sharing the wealth with shareholders, with its first quarter payday marking the 341st consecutive quarterly dividend paid by Pfizer, a track record that spans more than 85 years. However, this mainstay of the pharmaceutical industry became a victim of its success thanks to its dominant vaccine and a COVID-related boom that has recently dried up. Investors have abandoned Phi lately, driving shares down more than 30% in the last 12 months, while the S&P 500 has moved more than 25% higher in the same period. Since dividend yield is a simple equation that expresses distributions as a percentage of share prices, a big drop in a stock can naturally inflate the yield quickly. That's obviously cause for concern in the near term, but given its staying power, this big pharma stock could be a bargain as it trades near 52-week lows with a dividend yield of 6.3%. 2. 3M. The company, a market cap of $50 billion and a dividend yield of 6.5%. 3M, like many older blue-chip stocks out there, has gone through plenty of restructurings over the years. The firm is at it again in 2024, with plans to spin off its healthcare-related businesses in April as a new company branded as Solventum. That said, investors haven't been wild about the details that have come to light in the last 2 months, particularly given a bit of fuzziness around whether the new dividend yield will be the same or possibly lower for the remaining 3M operations. Obviously, the loss of a substantive cash-generating part of its operations means the nominal payout per share will decrease. But investors are uncertain about whether the yield will shrink even faster than the rest of the firm, and have punished 3M as a result of that and other uncertainties. Still, for the time being, the current operations of 3M make it qualify as one of the highest dividend-paying stocks in the S&P 500. Tread lightly and watch the news closely if you're interested in 3M right now. 3. AT&T. The iconic telecommunications firm. The company has a market value of $120 billion and a dividend yield of 6.7%. But investors may not know how much the stock has changed over the years. What was first known as the American Telegraph and Telephone Company got its start way back in 1885 and has evolved with the digital workforce to include data and wireless connections. It also dabbled in media until a restructuring a few years ago, when it spun out its stake in Warner Bros. Discovery. Since then, the core business of AT&T has been focused on data connectivity and shoring up its balance sheet. The proof is in recent fundamentals, including $16.8 billion in free cash flow in 2023, up from $14.2 billion in 2022 and roughly $3 billion in debt reduction last year. Throw in a dividend that remains a little over half of its earnings, and it seems like this blue-chip telecom leader has a strong foundation to stay relevant for years to come. 4. Another entrenched telecom behemoth that makes the list of top S&P 500 dividend stocks is Verizon Communication. With a market value of $168 billion and a dividend yield of staggering 6-7%. In fact, if you were impressed by AT&T's cash flow, then the even larger $18.7 billion put up by VZ in 2023 will be music to your ears. This is an incredibly strong position for the company, allowing it to comfortably service its debt and continue paying generous dividends to shareholders. After a 2023 increase in its dividend to 66.5 cents per share each quarter, the firm is riding 17 consecutive years of dividend increases and has a long-term commitment to dividend growth. And with those payouts currently amounting to less than 60% of 2024 earnings, there's ample headroom for future increases in the years ahead, even if the firm's growth rate doesn't set any records. If you're loving this video so far and want more content like this, make sure to comment below. 5. Devon Energy Corp has a market value of $28 billion and a dividend yield of 6.5%. Devon is oil and gas exploration company is perhaps one of the most risky dividend stocks on this list, thanks to its uncertain payout structure. Generous but variable dividends are provided by Dividend based on its free cash flow, which means investors are banking on strong energy pricing in order to power these currently generous but potentially uncertain distributions. Unfortunately, as energy prices have softened a bit in the last few years, shares of Devon have crashed more than 40% from their October 2022 highs. This volatility is also reflected in Devon's quarterly dividend payments, which have dropped from $155 at its 2022 peak to a low of just 49 cents last August. Dividend cuts like these are far less worrisome and often far less permanent than changes at regularly paying blue-chip consumer companies. That said, investors should remember that past dividend performance is no guarantee of future payouts if you chase this high-yield energy stock. These were the 5 highest dividend-paying stocks in the S&P 500. However, I have decided to give you a bonus stock. This company is the highest dividend-paying stock with consistent and reliable track record among the 5 previously mentioned. Altria Group Inc. This company has a market value of $72 billion and a dividend yield of 9.6%. Altria is a popular dividend stock that has been atop the list of the highest-paying S&P 500 dividend stocks for a while. That's because of its consistent and reliable yield and a great track record of increases in its payouts. Specifically, the stock has logged 55 consecutive years of dividend increases, longer than many other dividend stocks have even been in operation. Of course, growth is challenged for this tobacco giant that produces Marlboro cigarettes, black and mild pipe and cigar products, and smokeless tobacco like Copenhagen and Skoal. But it has stable operations and dominates the U.S. market for those who are looking for a nicotine fix. That is it for this video. If you found this video insightful, don't forget to like, share, and subscribe. Thank you for joining us today. Until next time, stay curious, stay informed, and happy investing.